Hello traders, what a wild ride today, I'm telling you. Anyway, the selling came in today. We had some news out, and like I said, we were at some reference resistance levels this morning, and then the news came out about this big hedge fund that had lost $12 billion shorting the markets. And the news came out that they had finally covered all their short positions, and the markets immediately sold off on that news, thinking that the recent market run-up was likely caused by massive short covering, possibly from this company and maybe other companies. But towards the end of the day, we managed to rally back a little bit. It's still the real easy ride to the upside on the markets is probably over with, and we're probably going to see some more chop showing up in the markets here, sideways or maybe even some slightly downward bias. Like I said, we are at some reference highs. We could base up higher here, or we could get a reversion lower. I'm hoping for the reversion lower, of course. You can follow me at Gumby9662C. Like the video if you like it. Make any comments you possibly can at the bottom of the YouTube channel. Okay, let me get into the video here. The next exciting thing happening today. Tuesday, the VIX contracts, the futures contracts, they rolled. So we got a nice little pop in the VIX. Okay, and today it continued higher, and it finally got up to about 1280 in the VIX contracts. But the whole afternoon, volatility was being crushed. I guess the traders decided to take their profits, and they didn't trust the massive run up in the VIX this week. Yeah, I saw this VIX setup today. We're right up here at my reference line on the VIX, where the VIX versus the VXV, and this is typically a short point for the VIX, and we just barely came off of that comparison here. So there could be some more downside in the VIX, so just keep that in mind. You could make some really good money shorting the UVXY today. I really want to talk about this SPY on the that's a 10-minute chart here. It's a longer term trend line here. We did close on the backside of this uptrend that we've been in for a while now. So just keep that in mind. If we open at these levels tomorrow, we will have moved out of the uptrend on S&P 500. So, and I fully expect that to happen. So we're probably going to see more volatility tomorrow. Although tomorrow is OPEX, so the market makers are going to try to pin the price as much as possible. So probably not going to see too much action ahead of the 3-day holiday. Some sectors I want to talk about here. Your XLK, your technology sector. I was seeing Amazon and Google. They're all running back. They're both running to close to all-time highs again, and catching a bid there into the close. So really watch your technology for continuation tomorrow. Your semiconductors, SMH, everything's looking green on them. Everything's lining up. We had a really nice bid right there into the close today. So it looks like your semiconductors and possibly your NVIDIA is even bouncing off of a cloud support, a 50-day moving average and cloud support. So it might very well be a good entry point for NVIDIA to the long side. We've had a really good move this week in our healthcare stocks. Well, with your Ichimoku clouds, everything's lined up, looking really good for more upside in your healthcare stocks. And several of them were catching quite a bit of pullback today. So look for tomorrow for some continuation in your Celgene and Amgen stocks. Your financials, we had, they were underwater most of the day, but they turned all positive there at the end of the day. So just keep a close eye on these. They're looking really strong for some more potential upside. Now on the bearish side, some things to look for tomorrow. I am thinking that you're going to get some resistance on your Chinese stocks. And let me change the time period here and show you why. Your FXY is coming right up to the cloud and getting there at the close. and possibly getting a rejection in your Chinese stocks. So we could possibly see continued weakness in BABA and Baidu and some of the other Chinese names tomorrow. XLE is the first confirmed major SPDR sector ETF to get a sell signal today. Ideally, you want all 8 of the SPDR sectors to be bullish, but now we're outright into a sell mode in the XLE. It was so just keep that in mind, that that's happened, and there's probably some more continuation to the downside. We got the sell signal in oil gas exploration 3 days ago, and then your oil index got a sell signal another sell signal 3 days ago, confirming sell signal. And to go with all that, we're getting builds in the gasoline inventories. We have sell signals in the gasoline index too. So that's a double negative for the oil index. Your DBA commodity index was also impacted by crude, but also the other commodities were showing some relative weakness. So this is initial warning that we could be seeing some weakness into the ag space. And remember, tomorrow Deere reports, and some of their comments are going to impact agriculture. So as of today, XLB, that's our materials index, and this is with the dollar even being weak, was showing some relative weakness relative to the markets. So we're getting 10-minute sell signals here, or 10-minute signals of the price action under the clouds now. So it's not a red flag yet, but just keep that in mind for your materials. And in that same frame of mind, just keep an eye on your XMA. It's not showing clear selling from here on the XMA, so you should be very careful about trading your steel stocks right now. Now your consumer discretionary today, it sold off and it did not recover, so keep that in mind. This was largely drawn down by your retail sector. That's another weak sector we have to worry about. And as you can see, your retail started selling off all day long and continued selling off. So that's not very good for the markets. And I'll finish off with XLU, and I want to point out here, we're putting in a reference double top here in your utilities, and things are starting to line up to the bullish side on the utility space here. So just keep that in mind. Utilities are more of a defensive sector, so there must be some more fear coming into the markets. And utilities also rallied today because TLT was catching a nice sell-off today. So, well, if bonds were to catch a bid, or interest rates would catch a bid tomorrow, then utilities would likely sell off too. But at any rate, that's all I got to say here. I do think there's more risk today than there was yesterday to the long side of the markets. So be very careful on